Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here is Laurie Bailey with EURUSD currency pair forecast. Let's have a look. Yesterday, the Eurozone's ZEW economic sentiment indicators for April were disappointing. The index plunged from 39.8 in March to minus 18.5, far below the forecast of 13.2. We believe the European business community is taking a more realistic view of the trade war's consequence that the media suggests, and is also skeptical about the off-budget plan to ramp up defense production. We previously stated that the US will likely be the trade war's main beneficiary. As a result, we view the entire April rise in the euro as speculative and expect a decline once the right catalyst appears. The first such catalyst could be tomorrow's European Central Bank monetary policy meeting. We anticipate a more decisive stance from the central bank in supporting the economy and responding to slow inflation. Today's forecast for March CPI is 2.2% yearly on year versus 2.3% in February. Core CPI is expected to ease from 2.6% year-over-year to 2.4% year-over-year. The ideal euro reversal point is the 1.1535 target. If volatility increases on the day of the ECB meeting, this level could be reached, possibly forming a bearish divergence on the daily chart. If there is no upward price spike, a move below the support range at 1.1110-1150 would signal a reversal. The price is rebounding from the 1.1276 support level on the 4-hour chart. The Marlin oscillator is breaking into the positive trend territory, indicating that the upward trend is still intact. Also, on this time frame, the Kijun, the MACD line, it's a blue line on a graphic, has moved into the 1.1110-1150 support zone, reinforcing its importance of a potential medium-term reversal area. And now it's time for GBPUSD. Let's discuss it with Paulo Greco. The average volatility of the GBPUSD pair over the last 5 trading days stands at 139 pips, which is considered high for this currency pair. On Wednesday, April 16, we expect the pair to move within the range of 1.3082 and 1.3360. The long-term regression channel is sloping upward, although the downtrend remains on the daily chart. The CCI technical indicator entered the overbought zone, which pointed to a downward correction, though this correction has already played out. The GBPUSD pair has resumed its upward trend. We still do not recommend long positions, as we believe the entire upward move is a correction within the daily time frame, and it has already become illogical. However, if you are trading based on pure technicals or on Trump, long positions remain relevant with targets at 1.3360 and 1.3428. As the price remains above the moving average line, it's a sign line on the graphic. Short positions are still attractive with targets at 1.2207 and 2144, because the bullish correction on the daily time frame chart. And sooner or later, unless the long-term downtrend ends before that. Currently, with Trump frequently announcing new tariffs or increasing existing ones, the dollar continues to decline. That's all for today. Wish you best of luck.